All right, can you hear me? It looks like I have the room left, so thank you for you guys staying behind. I appreciate it. I'm here to talk about one of the more fashionable products these days, high-yield bonds, and more specifically high-yield bonds in the Nordic market. My name is Joachim Skorge, and I'm Managing Director and Regional Head of Investment Banking for DNB Carnegie here in Singapore, covering the APAC region. Let me see here. All right. Just very quickly, because there's been some changes on our end. So DNB Carnegie is the leading Nordic investment bank with the pan-Nordic coverage. So we have a strong presence throughout the Nordic countries, including Sweden, Norway, Denmark, and Finland. That said, we still specialize in maritime and energy, so no changes there. But we have a very strong capital markets machine behind us, with also hubs in New York, London, Singapore, supporting our activities in the Nordics. And in terms of deal activity, over the past 5 years, we've done more than 1,400 transactions. And if you look at that compared to the competition, if you look at M&A and ECM, that's more than twice than the second bank on the list. More importantly for this room, we are currently also the largest maritime investment bank in the world, and that's across products. Both when it comes to high-yield bonds, which I will talk about. These are all statistics over the last 5 years for all three product groups, high-yield bonds, M&A, and ECM. But also we've been very active when it comes to maritime M&A. We also had the pleasure of advising on some of the transactions that were mentioned earlier here today, including the BW LPG Avance transaction and also the acquisition of Graham Car Carriers by MSC. Recently, we also advised on the Golden Ocean CMB transaction. Here in Singapore, that's our regional headquarters, and then we're also supported by the DNB network throughout the region with offices in Sydney, Mumbai, and Shanghai. Over to the topic today. The Nordic high-yield bond market has been exceptionally busy over the last 2 years, and especially last year and also year to date, 2025. This is a product that originated a couple of decades ago, mainly focused on maritime and energy, and in particularly offshore, financing very expensive assets being used in the North Sea and across the globe in the offshore industry. If you look at the market today, it's a very, very active market. We have issuers from multiple industries, not only maritime and energy. We have issuers from all over the world tapping into this market, and also the investor base is global. So some of the investors investing into Nordic bonds, of course, they come from the Nordic area, but we also have a lot of investors in London, continental Europe, US, and also throughout APAC. Some key attraction points when it comes to the Nordic high-yield bond market. I think a key selling point, when we talk to potential issuers, is that the process is very, very efficient. It's also much faster than other comparable markets. The documentation is all standardized, so typically we use standard bond documentation based on this Nordic trustee system. We have an investor presentation, a term sheet, and also due diligence is very light. So in terms of running a process in the US or any other market, it's very, very document light, and also legal costs are much more favorable, unless you're a lawyer, of course. Also, I talked about investor base, also that we see more and more international issuers. One of our clients who presented earlier today, Jensen Production, they raised $600 million in the Nordic bond market. Last year, it was a very successful transaction, massively oversubscribed. And I think that tells you, the level of interest also for first-time issuers coming from this part of the world. So it's absolutely possible for companies coming from APAC to tap into this market. Another key attraction point is obviously that the market is very, very strong at the moment. We're probably at close to all-time best when it comes to favorable conditions for issuers. Credit spreads are tight. I will show you some deals later on in the presentation. But you can today get very compelling terms, both in terms of structure and in terms of pricing compared to earlier. So you see also now that the volumes have been coming up, even with the issues that we had in the spring with Liberation Day and the tariff issue in the US, which brought the market to a standstill for about a month. We're probably looking at a new year of record volumes for 2025, and that's coming just after 2024, which is another record year. Then also in terms of funds flows, the market is currently favorable. Just some recent high-yield bond transactions. The last one was for International Seaways, which I will talk more about in a minute. But what you will see here is that a number of well-known issuers have been tapping into this market. You have some seasoned issuers like SFL, who presented also or was on a panel earlier here today. You have Ocean Yield, who's been active in this market, Odfjell, Navigator Gas. I mentioned Yinsen, that's offshore, not shipping, so they're not on this list. But it's been a very active market, with a lot of international issuers, well-known names, tapping into this type of structures. I think what we see in the market is that a lot of issuers that typically wouldn't be looking at a high-yield bonds, people who are very well banked in the traditional bank market and who can achieve very low margins in the traditional bank market, are currently looking at this product. I think we lost the presentation. Okay. Yeah. And the reason for that is really that, again, pricing is very attractive. To a certain degree, some clients see this as a form of equity replacement. We see that some issuers, they use this to repay bank debt, and then they have extra bank capacity when they look at acquisitions, fleet renewal going forward. And I think also people see the current window as very attractive. So even though you may not have a sort of clear use of proceeds, I think people feel timing in terms of, issuing a bond and securing money at this price, for 5 years, typically non-amortizing. It's too good to ignore. Just very quickly on International Seaways, which is the last transaction that we worked with. This is obviously a company based in the US, which I'm sure you're well familiar with, active in the tanker market, listed. They raised $250 million just a couple of weeks ago. That was a transaction that was upsized based on strong demand in the investor market. When we went out with this bond, the price whisper was in the high sevens. The indicated pricing range when we we did the formal launch of the transaction was between 7.25 and 7.5. And then based on strong momentum in the book building, we ended up with the pricing, which is 7.125%, which I think the issuer was very happy with. And I think that just tells you, what kind of terms that you can achieve in today's market. So I think the key takeaway from my end, this is a product that everybody should consider, even if you're private or if you're listed. Even if you have good access in the bank market, this is a product that you absolutely should consider. It doesn't necessarily have to be, as an alternative to bank financing. It can be a complement to bank financing. If you would like to discuss this, I'm going to be around for a little while longer. And we'll be very pleased to discuss this with you. In terms of sizes, just to mention that, typically minimum size would be in the range of $100 million, ideally bigger than that, ideally more than $200 million. And then the largest transactions we see in the market would be in the range of $600 to $700 million. So we don't see the mega billion-dollar transactions as we see in the US market, but we can still do very large transactions in a maritime type of context. So that was it from my end. Thank you.